Welcome back. You're still tuned into ET now. Let's put the spotlight on NMDC. Now, the stock has been in focus for the last two trading sessions. It is up another 3% today. One, of course, there were operational updates that the company reported for the month gone by. That's for the month of April and May. They have been good. And other than that, management commentary that came in from the management con call that happened yesterday has also been on the positive side. First up, let's talk about iron ore prices, where they expect iron ore prices to remain range bound going forward. They've also laid out their Capex plan. 6,000 crore is the Capex what they will be incurring for FY27, and 7,000 to 10,000 crore of Capex for FY27 and beyond. Other than that, important to note that the management has also reiterated their 2030 guidance, where they are saying that from 50 million tons of production that they achieved in 2026, they are looking to increase it to 60 million tons in 27 and to about 100 million tons in FY30. So that's the long-term roadmap, which is very positive. And to understand that in greater detail, we are now joined by Mr. Amitava Mukherjee, Chairperson and Managing Director at NMDC and NMDC Steel Limited, who is now joining us. Mr. Mukherjee, afternoon. Ashesha this side. Thank you for taking your time out and joining us here today on ET Now, and congratulations on a strong set of numbers. Higher volumes aided fourth quarter earnings for you, which were partially offset by lower prices. Street clearly have given a thumbs up to fourth quarter earnings, but how would you describe your fourth quarter performance?
I think Q4 has been a record-breaking performance. If you see our production, only in Q4, and I'm not talking about the entire year, it's been around 22% higher against about 153 million ton last year. We did about 163 million ton this year. So, sorry, 16 point, that's in lakh tons, not in million tons. So instead of around 15.3, we did 16.3 in this year, which is a growth of 22%. And this entire growth coming generically, without adding a new mine, without adding new machineries or anything. So this has been one of the industry highest ever. So we were pretty pleased, and the prices also in the Q4 were marginally lower than the previous quarters. It was hardly 3 to 4% lower. So naturally, the overall margin, of course, improved by more than 20%. And the top line, of course, increased much higher by 60% because of the steel trading business that was done in the Q4. But if you leave that out, then also the margins were very stable at 42% EBITDA for iron ore trading. And overall, the results were very satisfying.
Okay, so the fourth quarter results were very satisfying. But Mr. Mukherjee, let's also talk about prices then. You expect prices to remain range bound going forward. In fact, we've also undertaken some price hikes in the first quarter of FY27 so far. Do you intend to undertake some more price hikes going forward?
The prices, I think, going forward will be more stable. The changes would be extremely range bound. I see a period of stability in iron ore prices, at least in Q1 and Q2. I don't see much volatility happening in the immediate future, at least in the next 2 to 4 months. I don't see any major volatility happening. So we are happy with the prices stabilizing. We have no causes to complain. And I believe that if this holds, and along with our very substantial increase in production this year, in April and May, we have touched almost 10 million ton. And in May itself, we had a growth of around 20% as compared to last year. So if the prices hold, which we expect it to, and the way our production has increased this year, so we expect a very robust Q1 in this financial year as well.
After prices, let's also talk about volume growth, because you're expecting about 60 million tons of production in FY27 from about 53 million tons that you reported last year. What gives you the confidence of being able to achieve this kind of volume growth despite geopolitical uncertainty?
So I expect last year, of course, we did 53 million ton, as you know, and it was 20% higher than the year previous to that, which is a very, very substantial growth, and the entire growth was generic. This year, we expect to go to around 60 million ton. We will achieve 60 million ton this year. 58.5 will come from NMDC. And around 1.5 million ton we expect from our new mines, that is Deposit 4 and Deposit 13, which are under the ownership of NMDC CMDC Limited or NCL, where we own 51% of the stock. So nationally taken together, NMDC 58.5 million ton and NCL about 1.5 million ton. We expect that we will close at 60 million ton this year. And as you are aware, with the performance of the first 2 months, where the growth is around 20% as compared to the last year growth, which was itself a very high base to compare with. So you know that we are growing at around 20% in the first 2 months. So we see not much challenges, and we are very confident that we will reach the 60 million ton mark this year.
Okay, so you're confident of achieving 60 million ton mark in FY27, but revenue surge in fourth quarter was also led by trading business, which consisted of a one-off arrangement with NMDC Steel for sale of HRC, because you were telling us that NMDC Steel was facing some kind of liquidity crunch. Can you elaborate a little bit more on the rationale behind the arrangement?
This trading business was there in the Q4 of last year. It was a one-time measure. I don't think that such trading business will be there in this financial year. In Q1 of this year, there has been no HRC trading business at all. We don't expect it to happen in the near future. In the Q3, Q4, even if it happens, it will be a very meager quantity. So it was a one-time measure that was done to mitigate certain specific circumstances. I don't think that going forward, it will have any substantial contribution to the top line or bottom line in this financial year. So we can discount that line of business truly and properly.
Understood. And one concern which the street is worried about is the total dues outstanding, and they have risen by about 430 crores on a sequential basis. And this is because of higher receivables from NINL and NMDC Steel. What led to this, and when will the dues be cleared? Any timeline that you can share with us?
Now, two things. NSL, as you know, NMDC Steel Limited has turned around. So we expect this entire thing to be liquidated in the next about 18 to 20 months. If you see the pre-demerger expenses were 2,500 crores, they have already repaid around 700 crores, and it currently stands at around 1,800 crores. And NMDC Steel has also now started a bill discounting system, so we get our money back immediately on supply of iron ore. So that's not going to increase. And with the turnaround of NMDC Steel, we expect the entire quantity to be liquidated in about 18 to 20 months. So far as RINL is concerned, we also have an arrangement of bill discounting with RINL, and we are getting our regular dues. And in fact, they are paying us a little more than the supplies that we are making to them. So that will also progressively reduce. It will take a slightly longer time. And as you know, that the RINL company is held 100% by the government of India. So we do not see any risk, any credit risk in that transaction at all.
And since you're talking about NMDC Steel and the fact that it has turned profitable in FY26, how much will profitability expand by for NMDC Steel in FY27?
I think very substantially, very, very substantially. We are already at around 90% capacity utilization. It's likely to go up to 100% this year. That's one volume increase that will be there. And now that our plant operation has stabilized, so we are focusing on two things. One is cost cutting, and we know the areas where we can have substantial reduction in costs. And the second area is improving the margins, the net realizable value, because we would now like to graduate to better quality steel, which fetches us more net realizable value. So these taken together, the cost cutting measures, as well as the higher NSRs, I think we should be able to generate at least around 8 to 9,000 of additional margins per ton this year. So we expect this year the profitability will be very substantially higher. If you see the journey from last year to this year, we were at minus 3,300 crores year before last, and we ended up at around plus 74 crores. So it was a journey of around almost 3,500 crores in profitability. So we would expect almost a similar journey this year as well.
So that's as far as NMDC Steel profitability is concerned, and you're expecting it to expand manifold as we head into FY27. But let's also talk about Capex, and you have some Capex plan lined up not only for FY27 but beyond that as well. How will this be funded?
So these are all core capex in terms of all are related to increase of capacity of NMDC towards 100 million ton. Some of these works are already under execution in some of the units, and some of these works are on the verge of being awarded, and their execution will start in Q2 and Q3. And these are very substantial capex plans, and the works run into thousands of crores. So we are very confident that this entire 6,000 crores, which we expect this year, and thereafter going forward about 9 to 10,000 crores in the subsequent years, that we will be able to spend the entire amount of money for building capacity to reach to 300 million ton by the end of this decade. As of now, it looks that our internal accruals are adequate enough to fund this capex, and we do not envisage much leveraging to be done. If at all it is required, it will be required more than about 1.5, 2 years apart from now, depending on the sequencing of the actual expenditure happening at that particular point of time. But as of now, I guess internal accruals would be more than adequate to fund the current capex requirements of this year and next year.
Understood. So that's as far as Capex plans are concerned. Mr. Mukherjee, thank you so much for taking your time out and joining us here on ET Now. But shifting